Let's do it. Hey, so listen, welcome. So if you're watching this video right now, then you in for a treat today. You guys, I'm sure you guys may know who I am, or for those who don't know who I am, my name is Jacob Scott. I have a real estate team here in Atlanta, the Jacob Scott home selling team here at eXp Realty. And today I have the pleasure of introducing you guys to my man. His name is J. Daniel, the Credit Animal. Everybody give
Look out.
Applause for the
Look
Credit
out. Hey, thanks for the fake round. I like
Yeah. So that being said, you know what this call is all about. It's all about credit, right? So Jay, he's actually he works with Synergy Credit Pros, and the reason why I wanted to get him on this Zoom because, man, you know, I think credit is very important, especially if you're looking to buy a house now or in the future. You're trying to get a loan. You want to invest in real estate. You got to keep your credit up. And there's a lot of false myths that's out there in regards to building your credit or what you should do to get your credit up, what you shouldn't do. And
so
sometimes,
true.
I'm just gonna be honest, sometimes the credit bureaus, they're just flat out tricky, and you just don't know what to do. So I thought I would bring in an expert in to kind of help us navigate through this whole credit bureau, how to raise your credit, how to increase your credit score, and things like that, especially for those individuals that's looking to purchase a home sometime in the near future, especially with interest rates being as low as they are, even though they're going up. Hey, listen, here's the time to do it. So, Jay, welcome, man. Welcome to the call.
Hey, thank you. I appreciate you having me.
Hey, not a problem. Now, first and foremost, I just want to say thank you for taking this time because I think this is going to help a lot of people because I get questions all the time from our clients, buyers, sellers who want to sell their house and buy a house. They're asking, hey, what do my credit score need to be at? How can I improve my credit score? You get a lot of people that's working on their credit right now. And, you know, you guys you've worked very closely with lenders, mortgage lenders. So,
right.
Can you just kind of give everybody just a quick background about yourself, how you got started in the lending world, the credit restoration world, and a background about yourself?
Yeah, so we've started a few businesses in the past, and I used to be a mortgage originator, right? So I used to do mortgages, and then I have some friends that I've started a few businesses with, and they used to own a mortgage company, and so we just looked out there at what was happening with credit repair in the nation. And, most credit repair is based on a really, really large company. If I said their name, you'd know them. They're huge. They're the largest credit repair company out there. And what they've done is they've shown a lot of people how to make a lot of money doing credit repair. Essentially what they do is they do something that's extraordinarily cheap and extraordinarily easy. They just print off a bunch of dispute letters. They print the exact same dispute letter every month on every single account. And they just send it out to the credit bureaus, because when the credit bureaus get a dispute, they literally have to go out. They're compelled by the Fair Credit Reporting Act to go out to the original, whoever reported that thing in the first place, to the credit bureaus, and they have to verify the trade line. Now, it's pretty easy for them to verify the trade line, and everybody does the bare minimum, especially now. There's millions of disputes every month, and they do the absolute bare minimum to verify these things, which a lot of times is just comparing social or some other really simple information that was on the original application. Pretty easy for them to verify some things. And so we decided that we were going to go out and do a little bit more than just disputes. So we do investigations. We'll investigate the information used to open an account. We'll ask for specific info. We'll do regulatory complaints. A lot of credit repair companies are like, no, it just takes too much time to do a regulatory complaint. Well, sometimes you need one, sometimes, like a $15,000 auto charge off, like if you keep hitting that with a dispute, and it's within state statutes and limitations, they might feel compelled to take you to court because you just keep acting like it's not yours, And so, if you hit some high dollar items that are within state statutes and limitations with some disputes, and you just do it over and over and over again, you're just begging for a lawsuit. And so we had to find a different way. And that's just one example. We had to find a better way to do credit repair that had, number one, a better success rate, and number two, wasn't a danger to the client. And so we've been doing this for about 4 years now as a company. and have some just ridiculous success rates. We've seen a lot of people get ready for a home loan. So I think the biggest thing is, it's not a life sentence to have a bad credit score. It doesn't have to be with you forever. There are things that we get completely deleted from credit reports and they never show up again. So it is possible to get things cleaned up. But here's the thing, cash doesn't always fix the issue. And we'll go into that in a minute. But, a lot of people think, well, hey, in order to fix my credit score, I have to have ridiculous amounts of cash. That's not true. Sometimes you can go and pay things off. I had a lady that had $19,000 in collections. She got $30,000 from her uncle who passed away. And she ends up paying $19,000 worth of collections and dropped her credit score by 90 points. So, she went out and paid a bunch of collections and all it did was made them newer. Certain collections, most collections, it's not the balance that's hurting you. It is the code that's attached to this thing. So if you have a 4-year-old collection and you pay it, guess what? Now it's brand new, even though it has a zero balance. And so cash doesn't always fix the issue. And that's why half of what we do is literally just give people really, really good sound advice at where your cash is going to help you and where your cash is actually going to hurt your credit score. And then from there, of course, we work on getting things deleted. But we just saw a real niche in the market where we could do a heck of a lot more than just copy and paste a bunch of dispute letters. And we're helping people get ready for home loans. So it's good.
That's good. That's good. And you said something that was powerful that I tell a lot of my clients this, because people, a lot of times, people who want to improve their credit score, they'll call in to myself and my team and say, hey, yeah, I'm working on my credit. I'm paying some things off right now. However, they haven't even spoke with a lender. They haven't spoke with no type of credit specialist to determine, okay, what should I pay off first? You know what I mean? So I always tell clients, like, listen, first and foremost, let's talk to a professional first and determine what should you actually pay off, because you may be thinking that, hey, paying this American Express bill is beneficial, but it may be better for you to take X amount of dollars to pay something else off first, or pay something just down, versus paying it off. Can you talk about that? Because sometimes paying things off is not good as well. You should just pay them down. And then you also just mentioned too, that I want you to touch on why sometimes paying things that's been on your credit for a while, all it does is just make them new again.
Yeah. So, first of all, with paying things off, I'll tell you a couple places where cash helps and a couple places where cash hurts. Okay. If you have a collection on your credit report that is actually with a collection company, okay, it is the code that's hurting you. It's not the balance. Okay. And then the real question is, as far as how bad it's hurting you, is how old is that thing? Is it 4 years old? Okay, great. It's had 4 years to age. It's not hurting you as bad. You go make a payment on that thing, even if you pay $5, or even if you pay it off to zero, the code gets newer. The date of last activity is what's important. If the date of last activity is updated, and it will be updated when you make a payment, then you have a brand new collection on your hands, even if it's at a zero balance. And it resets the clock. It'll be on there for another 7 years. Okay. But here's a couple places where cash really helps you. Okay. If you have a company, even if it's a collection company, like, for example, one of the biggest ones out there, Midland Funding or Midland Credit Management, they will accept a payment for deletion as long as the account is 24 months old. Okay. So what they basically do is they go out to the credit bureaus and they're like, oh, sorry, our bad. We made a mistake in reporting this to the credit bureaus. We're so sorry. Can you please delete this from all 3 credit bureaus? Right. They're doing you a favor, because in order to get something deleted, there kind of has to be an error, right? Because it's just going to naturally be on there for another 7 years if it's not deleted. But if they go out and they say, hey, we made a mistake, you need to delete this from the credit bureaus, all 3 of them, then they're doing you a favor, because if not, it's going to be on there for another 7 years. And keep in mind, you've got a brand new collection. But there are companies out there that do a payment for deletion. They believe you scratch our back, we're going to scratch yours, right? And so they'll go out to the credit bureaus and they'll request a deletion on your behalf, simply as a thank you for you paying the bill. So if there's a company that'll take payment for deletion, cash does help. The other one is a little bit tricky, okay? If you have a credit card, and it has to be a former credit card, right? If it is charged off, but it's still with the original creditor, it has not been sold to a collection company. For example, JP Morgan Chase Bank, if you have JPMCB on your credit report, and it used to be a Chase credit card, right? But they've charged it off. They said, we don't want to be friends anymore. We're closing this account. You can no longer use this credit card, right? We're not friends, right? So they've said that. They've charged off the account. It is in charged off status, which carries the same code as a collection, but it's not a collection. It's still with the original creditor. You're going to get so many points for paying down the balance, because the balance is now hurting you because it's a credit card. Okay. It's not just a collection. It's actually a charged off account that is still a credit card because it's still with the original creditor. You'll get so many points for paying down the balance on that it will overcome the amount of points that you lose from bringing the date forward and making it newer. Okay. So do you make it newer just like the collection we were just talking about? Yeah, you do. However, you get so many points for paying down the balance that it actually helps your credit score simply by making you're bringing the balance down. Okay. So that's the only exception. If you have a credit card that's with the original creditor, even though it's a charge off, you do get points for paying down the balance. Okay. So those are things. And then the other thing that I want to mention as far as balances go, installment debt, like a car or a house, if you're wanting to improve your credit score, don't put your cash there. A lot of people think, oh, hey, I'm going to pay off my car and improve my credit score. And this car could be just in perfect standing. You never missed a payment. But hey, I'm going to go ahead and pay this thing off to improve my credit score. Won't work. As a matter of fact, that car might be one of your oldest accounts, right? So you're actually going to hurt your average length of credit history, which is only calculated on open and active accounts. What I would do is put your cash towards credit card balances, especially if you have credit card balances that are over 50%. Take that cash and pay those credit cards down. So that's one of the biggest things. 30% of the score is amounts owed, and all they care about is credit cards. They don't care how much you own a house. They don't care how much you own a car. They don't care how much you own a boat. If it's an installment debt, has an exact monthly payment every month, they don't care how much you owe. It's not affecting your credit score. But if you owe $500 on a $500 credit card, your credit score is getting just decimated. Because you're 100% utilized on your credit cards. Okay. Those are the places where cash helps. If you're going to use cash, use them on credit cards. Use them even on credit cards that are charged off, that are still with the original creditor, or use it on collections but only with companies that take payment for deletion. You know, any other company, make them sue you before you give them a dime, because collection companies, you pay those, it's going to hurt your credit score by bringing the date of last activity forward, making it brand new. Is that helpful?
Yeah. So let me make sure I understand you correctly. So what you're saying is, because the account been open so long, because of the length of the account, if you start making payments on, say, an account on this Chase credit card, it's actually going to hurt my score more unless they are willing to take a payment for deletion.
That's correct. And I'll tell you, the thing that happens is the date of last activity becomes very, very important. Now, legally speaking, the date of last activity is the day that you went late and never caught back up. However, they're allowed to update the date of last activity every single time you make a payment. So let's just say you have a collection that's sitting out there from 2018. Okay. Well, it's had a few years to age, right? It's a little bit old. So every year it hurts you a little bit less, right? Well, let's just say you go make a payment on that thing. Well, now the date of last activity just became March 2021 instead of 2018. So that date of last activity just came forward 3 years just by you making a payment. Now, did you do the right thing? Yeah, sure you did. If you paid on a debt that's yours, sure, it feels like doing the right thing, but you don't get rewarded for it in your credit score. It really stinks. It's one of the most unfair things out there in credit reporting. It's, hey, I did the right thing. I paid the bill. Yeah, but it hurts your credit score simply because you made the date newer. So it's an unintended consequence because they have designed it to where it hurts you less over time. But even though it's an unintended consequence, it still is a consequence. You pay on a collection, it's going to make the date newer.
That's man, you just dropped some nuggets right there, some jewels, because
just don't waste your money. Cash is
right,
precious.
Right. I mean,
credit is cheap. Cash is precious.
Yeah. You hear the term knowledge is power, or applied knowledge is power. Just if you don't know, you don't know. What you don't know can hurt you.
Yep.
That's. I mean, if you're watching this right now, I definitely recommend you rewatch this, take some notes because he shared a lot of good things. Or just reach out to Jay.
That's good.
In fact, well, we'll talk about that later. So let me ask you a question. So what can a person do to help build up their credit score? So say if they took a hit, let's just say a person got a 590 credit score, and they say, Jacob, I want to get to 660. I want to be able to qualify for the first-time home buyer program. They always ask me, well, how many months is it going to take? Of course, we know it just depends on what's in the credit score, but what could they do to help increase their credit score?
Yeah. So, one of the things could be like paying down credit card balances. Of course, we already talked about that a little bit. Another thing is, your credit score is really going to increase if you have a company on your credit report that will accept a payment for deletion. And if you don't know, hey, never hurts to ask, right? Hey, if I pay this, will you delete it? I'm not asking if you'll make it a zero balance. I'm asking if you'll delete it. Like, especially if it's derogatory, you want it deleted, like gone. You don't want it just updated to a zero balance, right? You want that sucker gone. But the other things that are going to help you build positive credit, and this is not just getting negative stuff deleted, but it's building positive credit. You need a credit card. And so I know this is going to fly in the face of some of you folks that are just like, look, I watched Dave Ramsey. I, have gone through Financial Peace University. I have sworn off credit cards. Okay, that's fine. I get it. Using cash and learning how to budget with cash is extraordinarily important. I think it's great. I think most of the stuff that Dave Ramsey teaches is really, really powerful. But I'll tell you this, if you're going to maximize your credit score, you need a credit card. Are you going to have to be, basically very responsible with it? Are you going to have to be disciplined? Yes. But you need a credit card or you're never going to get the maximum amount of points in your credit score ever. Revolving is huge. And some of you, if you don't have a credit card, you're missing out on 40 points that you could have in literally 3 months. If you've had a credit card before and you don't have a credit card now, even if you get a terrible credit card, like a little tiny $200 secured card where they have to hold on to your $200 cash in order to give you a $200 credit line, even that, if they report to all 3 credit bureaus your positive credit history, and make sure you ask them that. Open Sky does it, and I can send you a link. Text me and I will send you a link, right? And so if you get signed up for that, then you use that credit card. And here's what I would do. I would put a 10% charge on it every month. If it's a $200, tiny little $200 credit card, put $20 on it at the beginning of the month. Let that $20 slide all the way through until you owe the bill. When they bill you for that $20, wait until it's due and pay it. And here's why. Because they will report a $20 balance, which is basically a 10% balance on that credit card. They'll report it to the credit bureaus. Here's the thing. The credit bureaus don't know how you use your credit card. They don't know if you pay it off every month. They don't know what your habits are. They don't know what you spend every month. The only thing they know is that little snapshot that credit card company sends to the credit bureaus in the middle of your billing cycle. Okay. So if you have below a 7% balance, they'll stop scoring the card. It could go inactive if you keep that sucker at a zero balance. So you want to have above a 7% balance when it's reported and below a 10% balance when it's reported. This is only really that important when you're about to have your credit pulled. Okay. Other than that, use your credit cards to your heart's content, earn as many, Sky miles, as many cashback points as you want to, right? But when you want your credit score to maximize, you're about to have your credit pulled for a car loan, home loan, whatever, 10% balance. Let it ride all month. Let them report a 10% balance to the credit bureaus. And then at the end of the month, pay it off. That way you don't have to pay interest on that 10% balance, right? Because you will pay interest on the entire balance if you don't pay the full balance to zero. Okay. So yeah, sure, pay it off to zero, but then put a 10% balance right back on it, right? So you don't have to pay interest, but then you put a 10% balance right back on it. So everything that the credit bureau sees for a couple months is just a 10% balance. And they look at you and go, look at how responsible you are with the way you use your credit card. And those balances heal themselves every month. So that's one way to build positive credit. Get a credit card. Put a 10% balance on it every month. Let it ride. Sure, pay it off so you don't have to pay interest. But let that 10% balance ride all month so that the credit bureaus, all they see is a 10% balance. Okay. Another way that you can build positive credit, you can go to rockthescore.com. You can even report your rent. Now they're going to go out and find verification and prove that you've actually paid rent the last few years and that you haven't missed a rent payment, right? They'll talk to your property management company, landlord, or whatever. But that's something that you can do to build positive credit history, is go out and have them report your rent as a trade line, because I promise you this, your landlord's not going to report positive credit. Neither is your property management company. I don't know of any of them that do. Oh, it's very rare that somebody would do that, but you can get it done. You can pay a $99 fee to rockthescore.com. It's not my company, but I know the guy that runs it, and they do a phenomenal job. They're really, really good. We recommend our customers go there all the time. So if you build positive credit history, you can do it through installment debt, but you can also do it through credit cards. But the most important is get a credit card. And one other thing that you can do to build really positive credit history up front is this: you can get an authorized user account. If you have a friend or family member, go to Uncle Harry and say, hey, you know that credit card you've had open since 1978? Would you mind adding me as an authorized user? I don't need the credit card. I don't need to use it. They might send you a credit card with my name on it. I don't even need to see it. I don't need access to the funds, nothing. All I want is the history. If you have less than a 4-year average length of credit history, and they only calculate it on open and active accounts, an authorized user account is a great way for you to get serious history right away. Okay. And here's a real close nugget. If you rewatch this video, okay, because this is a real good nugget. In underwriting for a mortgage loan, they don't like authorized user accounts. I'm sorry, go ahead.
No, say that again.
In mortgage underwriting, they don't like authorized user accounts because they see them as fake. That's Uncle Harry's credit, not yours, right? But if you have your own credit card, like we just talked about getting, then that automatically takes away that red flag that they might throw in automatic underwriting, and automatically your authorized user account looks legit. So if you have your own credit card in just your name, okay, then authorized user accounts become just fine to automatic underwriting, and you can actually skyrocket your average length of credit history. Let's just say that your average length of credit history is 1 year because you have 2 open credit cards that you've had open for just 1 year. Well, let's just say that Uncle Harry adds you to a credit card that's been open for 30 years. Now you've got 30 years plus 1 year plus 1 year. So you've got 32 years divided by 3. Now your average length of credit history is over 10 years. I mean, it's pretty powerful how you can impact your average length of credit history just by getting an authorized user account. So get a credit card, get an authorized user account, and even have your rent reported as a positive trade line. And Experian will even allow you to report your like your basic utilities. And it's only Experian that it's going to help you on, right? But Experian Boost, it works. We see it increase credit scores all the time. So those are some nice little nuggets for you to boost your credit score in a positive way. But still work on getting negative stuff deleted, but building positive credit history is the other piece that a lot of people ignore. It's super important.
That's good, Jay. That's why they call you the credit animal, man. This is really good.
I'm glad, man. I'm glad. Hopefully it's helpful.
Yeah, this is really good because there's a lot of people that want to be homeowners. A lot of people that have literally $2,000 a month right now, and because of some slip ups in the past, or maybe a hospital bill, their credit score is down, and they're just in a situation where they just can't buy and they don't know what to do. So I think seeking out a professional is always wise. It's always something that you should do to get some answers. You know what I mean? Whether you're going to try to do it yourself, I tell people, if you got money, it's either you got time or money. Right? If you got time to do all this and you know what you're doing, then do it yourself. But if you don't really have the time to do it, and you're really quite not sure, and you got a little money, pay a professional. Because you only got time or money.
So true.
To me, if I got a little money, I'd rather pay somebody to do the grunt work, get the job done. That way I can continue to make more money. That's just my little nugget for today. That's just my little nugget right there.
Time is money. That's so true. Your time is valuable. Yeah.
So that's powerful. Man, that's pretty good. So let me ask you one other question. We're gonna wrap this up because I think you laid out a lot of nuggets. But let's talk about FICO scores. So I get this a lot. Jacob, I've seen FICO score and Credit Karma. Jacob, I've seen them on FICO scores, say such and such. And I always tell buyers, listen, the lenders, the loan officers, they're gonna look at your middle score. Most of them do. You know what I mean? Every so often I run into a lender that may just look at one score. But most of the lenders are looking at all 3 scores, and they're looking at your middle score. They're not
Yeah.
looking at FICO score. Am I correct? Or you can't touch on that?
Yeah, so there's all kinds of scores out there. When you look at Credit Karma, that's actually a Vantage scoring model. It's not a FICO score. FICO really kind of runs the game when it comes to scores that lenders are actually going to use, and that's the Fair Isaac Corporation. That's where they get FICO from, Fair Isaac Corporation. But when you go out to Credit Karma, that's why it's so frustrating. A lot of times you go out to Credit Karma and you see your Vantage scoring model. It's not a FICO score, and you think, hey man, I've got a 660 credit score. I'm good to go. And then you go to a mortgage lender and you find out you're actually at a 605, so it can be a good bit lower, your actual FICO score. So, it's a big deal to make sure that you have quite a cushion from your Credit Karma or your Credit Sesame, or even, like NerdWallet, all these places that are giving you free credit scores. It is free. They don't hit you with inquiries. So it's a great place to get information on what's reporting to the credit bureaus, like what's hitting you on those trade lines. Those trade line information that's going to be accurate. The dates, the coding, who's collecting, all that stuff's going to be accurate. But the calculation of the score, that's where Credit Karma goes wrong. Okay. It's a Vantage scoring model. That means the mathematical problem that they use to calculate the credit score, it's just off, right? So that's the only thing that they're missing. They're calculating all the same accounts, all the same information that the bureaus are giving, but they're spitting out a different score. So what really matters on a mortgage score is FICO Beacon 5.0. That's one that's used, right? Classic, or version 2, right? Or Classic 04. Those are 3 scores that are used in the mortgage industry, and every single mortgage loan officer has to pull the exact same scores, but they're going to be lower almost every single time. Not 100% of the time, but almost every single time they're a good bit lower than Credit Karma, because the Vantage scoring model is a little bit, it's a little bit more forgiving. So just keep this in mind. Credit Karma is out there. Their job is to sell you a credit card. That's why they want to go, hey, look at what's happening with your credit score. Come to our website. Why do they want you to go to their website? So they can sell you a credit card or a personal line. That's what they're there to do. JP Morgan Chase Bank, Capital One, they're all advertising on that website. That's what makes it free. We're here to give you free information. No, we're here to sell you a credit card. That's what we're trying to do. So as long as you understand what their game is, you can use that information for your benefit. Just understand the score is going to be a lot higher than what you find being pulled at like a mortgage lender or a car dealership.
Excellent.
Does that answer the question though?
Yeah.
Okay.
I think that's good, because a lot of times people, they swear by Credit Karma, and like you say, most of the times when they actually go,
I use Credit Karma.
Get their credit in is a little bit lower than what they anticipated.
Right.
But is there any online sources that you recommend that a person can go to get a free credit report that actually shows something close to what most lenders are going to be looking at?
Yeah, the closest thing is going to be the FICO 8 score. The FICO 8 score is used mostly in the credit card industry. Like, hey, we're going to give you this credit card. We're going to give you a free credit pull every single month. Okay, that's cool. And every time you log into your credit card, you're going to see the credit score there, and that's great. If they're giving you a FICO 8 score, the FICO 8 score is a lot closer to the FICO scores that are used for mortgage. It's a lot closer. It's going to be a little bit lower than Credit Karma, but it's going to be at least a lot closer score. But the only way to truly know what your mortgage FICO is to have your credit pulled for a mortgage loan, right? So just the tip is, all these places that give you free credit scores, just make sure that score is a lot higher than what you need, right? So let's just say you need a 620 to get an FHA done, or a 640 or a 660 to get down payment assistance on an FHA loan. Well, make sure that you're over 700 on Credit Karma, So make sure you have a good bit of a cushion. And if you're not there, get some help with it, So now, keep in mind, if you have things that you can pay down, like credit cards, hey, you're going to get points for paying down credit card balances. Big points. It's 30% of the score, But, and then also credit cards that are still with the original creditor, even if they're charged off, you're going to get points for those. And then companies that do payment for deletion, you're going to get points for those by paying the balance. But most of the other ones, most of the companies out there, they're not willing to delete. You might need to work with somebody like us, and that type of thing. But if there's things that you can pay down and improve your score, do it, especially credit card balances. 30% of the score is amounts owed on credit cards. And so if you're sitting there with $1,000 credit card and you owe $998 on it, you're going to be blown away by how many points you get by paying down that $998. Blown away. You're going to get a ton of points. And so if you get your score to where, to over 700 on Credit Karma, you're probably going to be ready for most mortgage loans, and if you need your score to be at like 720 for a refi, make sure you're at 770 or so, on Credit Karma.
Now, Jay, if that credit card is in collections though, now, do you recommend they still pay it down, or do you recommend that they maybe get some consultation? Because then you say if it's in collections.
Yeah, if that credit card is in collections, you're not going to get points for paying down the balance. You're just not. All you're going to do is take a negative code and make it brand new. I mean, the month you make the payment, that's what the date of last activity is going to update to, and it will really hurt your score. Especially if the date of last activity is like 5 or 6 years old. I mean, you're a couple years from that thing dropping off your credit score, and now you made a payment. Well, now date of last activity just updated, and guess what? It's hurting your score more, but it's also going to be on there for another 7 years from that date. So you pay something today. Let's just say you pay one of these collections off today. Guess when it's going to cycle off your credit report? 7 years from today. So, it's some of these consequences are unintended, but they're very real, so you don't want to go paying on something unless you're going to get benefit for that cash. Cash is precious, make sure that it's actually benefiting your credit score before you spend it.
Gotcha. So in a situation like that, ladies and gentlemen, you probably just want to reach out to Jay, at least some type of specialist, to say, okay, if I pay everything else, just leave this alone, how would that affect my credit, or what alternative that you recommend, and you will be able to kind of go into detail with them in regards to that once you actually see what's on their credit report and how long it's been on their credit score, how long it's been reporting, and how long that particular it's been open.
Correct.
Credit line.
And then a crazy situation like, I mentioned JP Morgan Chase Bank a minute ago, but also Discover Card, right? Discover Card, they typically collect on their own debts. They're going to keep it, right? So if Discover Card is charged off your account and they no longer want to be friends, they've charged it off, but they're still trying to collect. If the balance is still with Discover, you're going to get points for paying down the balance because it's with the original creditor. Your account's always been with Discover. It's still with Discover. They haven't sold it to a collection company. You're going to get points for paying down the balance. Okay. So that's a real nugget to hold on to.
That's good. That's good. Man, so we touched on a lot right now. I know you're busy.
Yeah.
But I just really wanted to get with you, Jay, the credit animal. Just to, just to let people know why they call you the credit animal, because real talk, you drop some jewels. I recommend anybody that's, want to improve their score, whether they want to buy a house, whether they want to, invest in real estate, whether they want to get a brand new car, they want to get a lower interest rate on their current home or whatever.
And if you need a realtor, I know this guy, Jacob Scott. I think he's really, really good at finding you a house, negotiating deals.
Yeah, I heard about that guy too. Who is that
Jacob
guy?
Scott, yes. Check him out.
Is he in Atlanta? Is he in Atlanta?
He is in Atlanta. Look at that.
You know what? I think I heard of that guy right there.
That's right.
Listen, man. Well, listen, Jake. How can people reach you if they want to get in contact with you? What's the best way for them to reach out to you?
The easiest thing is my cell phone number. I still have a Nashville cell phone number. So 615-727-3777. You can always reach me at Jay at synergycreditpros.com. But feel free to drop me you can call me, leave me a voicemail. Maybe you'll grab me on the phone, shoot me a text. I mean, we're pretty darn responsive, and we'll get you a free consultation. So consultation's always free. Sometimes we just give people free advice. Sometimes it's a one-time fee. Like, hey, look, all you got to do is pay down a couple things here. These companies take payment for deletions. We'll just do a one-time consultation fee. The initial consultation is always free, right? But then sometimes it's just like a one-time fee deal. And then other times, hey, it's $49 to enroll, $99 a month, and maybe it'll take us, 4 or 5 months to get some things deleted, right? But bottom line is the initial consultation to find out what's going on, it's free. It doesn't cost you a darn thing. So you might as well have a consultation and see if we can help. So, and then, the information that you learn, even in the consultation, can be very, very valuable.
Yeah.
But thanks for asking that, man. I appreciate that.
Yeah, that's good. That's good. Well, hey, Jay, listen, I'm not going to hold up much of your time. That was great. Let's do this again. Let's do it again. And, you know, things always changing, technology always changing, and maybe we can do this again and just give more value to our community out there to help more people become homeowners and help more people increase their credit score so they can build wealth. Because you know, credit can generate money. Credit can be leveraged. And I mean, literally, I flipped a few back in the day, back in 2000 and 2007, 6, for the market crash. I mean, literally, you had 750 credit score. They would give you, this is back then, they would give you $100,000.
Yep.
Just money that you use for do whatever you want to do. So just having good credit and being in a position to utilize that if you need it for whatever your business is, or whatever your passion is what this thing is all about. And that was the whole reason why I kind of wanted to get you on this call, just so we can debunk some of the myths that we hear about all the time when it comes to removing credit, increasing your credit score, and things of that nature. So, Jay, again,
thanks for having me on, man. I appreciate it.
Yeah, man. And anything I can do for you, let me know. There it is, guys. Jay, the credit animal. Listen, anything you need, reach out to him. Watch the replay, and if you need any assistance in selling your home or purchasing a home here in the Metro Atlanta area, or if you're out of state and you're looking for a good agent, listen, we have resources all across the United States, and we can guarantee we can help you out and get you into your dream home and make this thing very smooth for you. So that being said, reach out to me. You can call me at 678-904-2178, or you can call me on my cell, 404-664-7190. God bless you guys. Y'all have a good one. Jay, I appreciate you, man.
Thank you.
Talk to you soon, bro.
You guys have a great one.
Have a good one.
All right.
See you, man.